It's been quite something watching the financial markets recently. Some big swings.
Absolutely. You see things like, well, crypto prices dipping a bit.
Yeah, softening.
Well, gold is just soaring, hitting new highs, actually. It definitely makes you think about how these pieces fit together.
It really does. And that's what we're going to explore today, isn't it? How these uh, global events and, trade relations between the big economies ripple outwards.
Exactly. Affecting totally different kinds of assets, digital coins on one side, precious metals on the other.
Right. We've got some reporting here from today, April 16th, 2025, that really digs into how these recent trade moves are shaking things up for crypto and gold. Let's get into it.
Okay, so the main event, the real catalyst here, seems to be a pretty major hike in tariffs by the U.S. on goods coming from China.
How major are we talking?
Well, some are reaching as high as 245%.
Wow, 245%. That's
Mm-hmm.
that's substantial. And this isn't just out of nowhere, is it? There's some context.
Mm-hmm. Yeah. It's generally seen as a retaliatory move in the ongoing trade situation. And it's not just tariffs either. There are also new limits being put on ship exports alongside this.
Okay, so tariffs and ship limits. How does this compare to what was in place before?
Right. So for perspective, the previous U.S. tariffs on some Chinese goods were around, I think, 145%. And China's tariffs on certain U.S. goods were about 125%. So going up to 245% is well, it's a significant step up.
Definitely an escalation. How's China responding officially?
Well, the foreign ministry spokesman basically came out and highlighted the need for, let me get the phrasing right, equality, respect, and mutual benefit. Those are the conditions they've stated for, getting trade talks back on track.
Got it. Equality, respect, mutual benefit. Sets a clear tone. Okay, so these tariffs go up.
Hmm?
What happens next, particularly in the crypto space? Sounds like there was an immediate impact.
There really was. The crypto market took a hit pretty much straight away. Bitcoin, for instance, dropped over 2%.
Hmm.
And the overall crypto market fell by about 3.75% in that first 24-hour period after the news broke.
So why is a trade dispute, between the U.S. and China send ripples through crypto? What's the thinking there?
The prevailing idea is risk aversion. When you have this kind of heightened uncertainty, these big trade tensions, investors tend to get, well, nervous.
Right.
And they often move money out of what they see as riskier assets. Cryptocurrencies often fall into that category for many investors.
Okay, so it's a flight from risk. Do we see that elsewhere, like in the stock market?
Yes, similar story there. Futures for the Nasdaq 100, the S&P 500, they both dipped as well. It shows that broader market unease.
It really connects the dots, doesn't it?
Yeah.
Trade policy impacting digital assets. Now, Bitcoin had been doing okay before this, relatively stable.
It had, yeah. It had gone through a period where prices weren't swinging quite so wildly. But there's an interesting technical point some analysts noted.
Oh, yeah? What's that?
Around March 9th, Bitcoin's price actually dipped below its 200-day simple moving average.
Okay, the 200-day SMA. Why is that significant?
Well, it's often seen as a kind of long-term trend indicator. So when price falls below it, some traders see that as a potential signal, maybe, of a larger shift in the market's direction. Like maybe the underlying trend is weakening.
So that dip below the average back in March could have been like an early warning sign.
Potentially, yes. And building on that, some analysis from Coinbase Institutional suggests this recent sharper drop might actually be the beginning of a new, well, a bear market cycle, maybe starting around late March.
A new bear cycle. That's a strong statement. What are they basing that on?
They're looking at a specific metric, a risk-adjusted performance measure called the Z-score. And based on that, their read is that the crypto bull run probably peaked or ended around late February.
Late February. So the market's just been kind of treading water since then until now.
Pretty much, yeah. They described it as moving sideways, sort of neutrally, without that strong upward push we saw earlier, until this recent tariff news kicked things downwards.
Okay. That's one interpretation. But isn't there another viewpoint floating around? Something about trader confidence.
Yes, that's right. There's a contrasting take from a trader at Wintermute. They suggest that the period of relative price stability we just talked about,
Yeah.
it actually gave traders more confidence. Not necessarily confidence to buy aggressively, but confidence to use hedging strategies more effectively. Ways to protect their positions.
Oh, okay. So stability allowed for better risk management.
Exactly. And because traders were hedging more, some of the big players, the prime brokers who handle large trades, apparently shifted their stance. They moved from being pretty cautious about risk assets towards more of a neutral position.
So interesting. One view sees signs of a potential bear market starting.
Hmm?
Another sees the previous stability actually boosting confidence in managing risk.
Hmm.
Really highlights how complex reading the market is.
It absolutely does. And what most people seem to agree on now is that the next moves will likely depend heavily on, well, the incoming economic data.
Right. The hard numbers, they'll tell the tale, potentially.
Yeah, that data could either confirm the worries fueling this risk-off move or maybe ease some of the tension if things look better than expected.
Makes sense.
Yeah.
Okay, so while crypto is feeling the pressure, you mentioned another asset moving in the opposite direction, gold.
Yes, the classic safe haven play. With uncertainty swirling around riskier assets, we're seeing that typical move towards things perceived as safer, and gold is definitely benefiting.
How much has it gained?
It's had a really strong year so far. Gold is up over 26% year to date.
26%. That's significant. What's driving that besides just general nervousness?
Well, a couple things. One factor is the U.S. dollar, which has actually weakened quite a bit this year, down about 9%.
Okay, weaker dollar helps gold usually.
Typically, yeah. Because gold is priced in dollars, a weaker dollar makes it relatively cheaper for buyers using other currencies. But the really big push, the thing that sent it to a new record just now, seems to be directly linked to these escalating U.S. China trade tensions.
So the tension specifically pushed it over the edge to a new high.
Yeah.
What's the number?
It hit $3,300 per ounce, a new record.
$3,300. Wow. That really spells out that flight to safety narrative loud and clear. Now let's circle back quickly to Bitcoin. You mentioned the 200-day average. Is there any other technical analysis giving clues right now?
Yeah, there's an analyst, Ali Martinez, who's looking at the charts. His take is that Bitcoin is basically consolidating right now.
Consolidating, meaning trading sideways in a range.
Exactly. It seems to be moving within a defined channel. And crucially, he notes that the $83,200 level seems to be holding as support.
83.2. Okay, so the price is hitting that level, but bouncing off it, not breaking below.
For now, yes. It's acting as a floor, at least temporarily.
And what could that mean, technically speaking?
Well, the thinking is, as long as that support level holds firm, there's a chance Bitcoin could bounce back up, maybe towards the middle of that trading range, or potentially even testing the top edge of it again.
But it's not a guarantee, obviously.
Oh, absolutely not. Markets are fluid, things change fast. So it really remains to be seen. Will it hold and recover, or will the pressure eventually push it below that $83,200 support? That's the key question on the technical side.
Okay, so let's recap the main threads here.
Huh.
We had this significant increase in U.S. tariffs on Chinese goods, which seems to be the trigger,
Right, up to 245%.
which then led to a noticeable downturn in the cryptocurrency markets, like Bitcoin, as investors seemingly shied away from risk.
Yep, that risk-off sentiment kicking in.
But at the same time, we saw investors flocking to traditional safe havens, pushing gold up significantly, even to a new all-time high.
Driven largely by those same trade tensions.
And even within crypto, we have these differing technical signals and analyses, some pointing to potential further downside, others seeing possibilities for a rebound if key levels hold.
Exactly. It shows these aren't just separate events happening randomly. They're all kind of linked reactions, illustrating how sensitive different asset classes are to these big global economic shifts and, political developments. Investor feeling really matters.
It paints a really clear picture of just how interconnected the global financial system is. And action on trade policy over here causes waves way over there.
It really does. And, that brings up a bigger question, maybe something for our listeners to think about.
Yeah.
When you see all these factors interacting, the big economic policies, the geopolitical chess moves, the swings in market psychology, what does it suggest about maybe the resilience or the potential fragility of the whole global financial landscape going forward? It's definitely worth considering how these dynamics might influence how we understand trends and ultimately the choices we all make.